Impact of U.S. political decisions on markets. U.S. political decisions hold tremendous influence over financial markets, not just within the United States, but across the globe. As the issuer of the world's reserve currency and the home of many global corporations, political actions taken in Washington can either drive confidence or trigger volatility in the markets. For starters, fiscal policies, decisions related to government spending and taxation, play a critical role. When a U.S. administration proposes infrastructure spending or tax reforms, markets react. A promise to cut corporate taxes, for example, can boost investor confidence, leading to a rally in U.S. equities and strengthening the dollar. On the other hand, increased government debt or uncertainty over budget approval can trigger sell-offs. Geopolitical decisions also matter. Sanctions, trade wars, and foreign policy shifts influence investor sentiment. A classic example is the U.S.-China trade tensions. When tariffs were announced, global markets, especially forex pairs like USD/CNY and USD/JPY, experienced heightened volatility. Election cycles are another major driver of market movement. In the lead-up to a U.S. presidential election, markets often become volatile as traders try to price in potential policy shifts. Investors analyze candidates' economic plans, regulatory stances, and foreign policy agendas to predict which sectors might benefit or suffer. One of the most watched political institutions is the Federal Reserve, which, while technically independent, often becomes entangled in political discussions. Any hint of political pressure on the Fed to adjust interest rates can cause market jitters, especially in the forex space. Regulatory decisions, such as changes in banking regulations, environmental policies, or healthcare laws, can also shift market sentiment. These policies directly impact company earnings and investor expectations, which in turn affect stock indices and currency values. In summary, traders must recognize that markets don't move on numbers alone. They move on expectations, and political decisions often reshape those expectations instantly. Staying informed, especially through trusted sources like FXCM, can help traders anticipate shifts and position themselves wisely in volatile political climates.